in my mind, I just feel like S&P is going to 4,100 and maybe even to 43. What you're about to see is a video snippet from inside the boiler room. Every single morning before the open of the US stock markets, I analyze dozens of stocks and then decide on the trades that we're going to look at for that day with dozens of traders. We all get together, execute trades, chat some, and make some money together on a Zoom conference call. Go to thepatterntrader.com/club to find out more. You know, it's just easy to get caught up in the mess of all of this and wonder what's going on. And then the clouds part. And, you know, and this is especially true, you know, a bull market where it just shrugs off, you know, bad news and then closes on the high of the day. So we have this key reversal. Now, you know, it's in a, you know, whole kind of mess here. And we wonder, you know, is it going to go and then fail and all of that stuff. But in my mind, I just try and, you know, not overcomplicate it. Something close on the high like this, after it's put on a formation that looks bullish, we have this inverted head and double bottom, inverted head and shoulders. We kind of broke out the neckline. We retested the neckline. We've taken out the high. And everything looks like this thing is turning around. I've been looking at these charts, the IGV, and it's just hard to, you know, this is, you know, while it's taking its sweet time, that's what happens. Bottoms and tops take its time. Markets just don't go to a low and then take off again. You can see that this has taken 6 months to kind of turn this U-boat around. And now we're ready to go like this. And that's probably instructive for the dollar. The dollar, you know, has been going up for 11 years. It looks like it's topped, but now I got to believe that it's going to, you know, do some work sideways or what have you. I don't think it's just going to go straight down. But I'll let you cover that, Dragon. So we had all kinds of signals in here. There's kind of this funky reverse symmetrical triangle, which in and of itself doesn't mean a whole lot. We broke through and now we broke back into the pattern. So, you know, it did not extend. Now it looks like it's going to, you know, at least extend to the upside of this pattern, 310 or more. So, you know, and then we've got this downtrend line, which is about to be taken out. This downtrend line is right here. So, you know, to me, 290 was really the inflection point. And then above that, you know, we're going to have a breakout. And I do think we will have one. And then the question is, do we do a pullback and it's, you know, off and running, or, you know, do we hit something and then go like this and then crap out again? So that's kind of the constant dance. You know, it's hard to kind of accept the change in reality. You know, we've been in this 14-month downtrend and now things are changing. And that's why, you know, 2 weeks ago in my email, I said, we have to be open to all possibilities. Everybody's so bearish. It looked like the place to be, but you have to be objective and open to the market informing you something differently. And I was kind of feeling that all of these things were possibilities because, you know, this formation, especially in the IGV, you know, kind of, it is what it is. You know, it's a bottom. And so, you know, everyone was telling us it's still so bad out there. And that's why the markets are ahead of people's thinking. And you can't listen to anything but, you know, the market and then just be objective. When the market tells you something, it's like, it may be counterintuitive. It may be, how can this be? But you just got to surrender to it. Surrender to the will of the market. So to me, when you get these kind of things where it closes on the high, you know, this has actually told you where the risk is. These guys try to take it down. By the end of the day, it was up there. So they told you that's where the risk is. So now you can, you know, put this on and you know where the risk is. So, you know, there are certain days that are very clarifying. You know, I wait for certain days, makes a new low, close on the high. You know, I get long on those days. So, you know, either do something in the morning or wait till the close. And this is what I did, you know, waited till the close and I start buying all of these call options on the close. And my thinking is either it's going to open higher, which it is, or even if it opens lower, to me, I would just consolidate and buy more. So, because this kind of has de-risked it in a way. Now, the possibility with these key reversals, and again, this is where this endless noise in your brain comes, is, it's a large range day, and now it's going to gap higher. So, it always opens the possibility you go higher, and then you could come back like this. I always look at the dance around the unchanged. And when you have a big range, there's always a chance that you revisit that body. So again, we're going to get back into another area where, you're going to hit this 295, 297, and that's where the market will, kind of fluster. So, I'm long all of these calls, and I'm going to look at, 295 to 297. I'll take profits in there. In my mind, I just feel like S&P is going to 4,100 and maybe even to 43. There seems, and again, I don't play gaps. I don't recommend you play gaps. They're kind of meaningless. There is a gap right there. And I've kind of felt like we're going to fill that. So yesterday, when we hit 4,000 the other day, and then we start going down to 3,900, I go, I thought, didn't quite, I thought we were at least getting to 4,100. And it looks like now we could go higher. Right in the middle of this on the weekly and the monthly, you kind of have this funky in the reeds bottom. It's so kind of covered up by all this other stuff. And then you have this rounding bottom here. And there's a series of bottoms. And so it's so hard with all of this conflicting information whirling around every day, confusing us, going up and then going down, that, to me, the patterns govern the future behavior. And then yesterday, again, we have this bar that just cuts through all of the crap and clarifies. Makes a new low, shows us where the risk is, and then, the buyers were in control by the end. So when I, see this, I just simply, yeah, there's a double top here. Yeah, there's all kinds of problems. I was conflicted. I said, just buy it. Just don't overcomplicate it. It is what it is. I tend to overanalyze and rethink. And, I was going through that, and I said, just, it's the hard thing to do. Just buy it. There's a little bit of, kind of noise right above here. So as we go, we're going to hit this noise. We may just see an early morning pullback here. But I do think that these pullbacks are opportunities to, load up on Qualcomm and Workday and Bank of America. And the S&P is also starting to, break out, if it hasn't already. So here we are. Today, it's going to break out above that. So we're breaking out. Will it continue? Is it a fake move? I imagine we'll get all kinds of nonsense, but I feel like this is climbing a wall of worry, and the path of least resistance right now is higher. The Canadians stopped raising their interest rates yesterday. So I think that we're getting closer to the end of this interest hike regime. So you can see we're, in this channel in the S&P, and, we'll bang into it, around whatever, 40, 50, 40, 60. So you might just see some resistance there, and then 4,100 is going to be resistance. So those are the areas where, I've got these call options. They're extremely sensitive to, price things. And so this is where I'm going to be, setting my objectives, take some off at 40, 60, 40, 70, and then some off at 4,100. And then any pullback, I'll look to reload again. But these levels just may not mean anything. I think 4,100 is really just the next real resistance. And it just looks like these markets want to go higher. Hey, if you would like to trade alongside me every day and join our most prestigious program, then head over to thepatterntrader.com/club for more information.